I think I'm back again. Not sure. Ugh. Streamlabs this week has, like, Streamlabs, Canva. I've been having some major issues this week. I had some trees taken down a week ago. I wonder if it ripped out my cable or weakened my cable. I'm wondering now if that's really what happened. The other thing I'm going to do is reset my IP address. Oh God, more fucking doom. Ugh, so gross. Like a tree in the woods. So stupid. Like, we did this shit yesterday, right? Just like sit here, and sit here. We're like, we're gonna go down to the depths of hell. Okay, go down to the depths of hell then. We can buy that dip too. Like, keep doing it. They have something here saying, I didn't get to watch it, but they said stocks slide on Fed fears. I don't know what the Fed fears are. I want to know what they mean by Fed fears. I'm assuming they're saying stocks are sliding on Fed fears, no rate cut, maybe. I know they're mumble jumboing it right now. They started that like a week or two ago. Or like last weekend specifically. I started watching what they were saying, and I was like, oh fuck, here they go. They were like, like stocks are gonna crash due to Fed rate cuts. Stocks are gonna crash due to Fed no rate cuts. Fed's gonna do this or Fed that. That's why we're crashing. And I'm like, oh, here we go. Here we go. We're gonna fucking go down the whole entire thing. I'm safe. Down we're not down 1% anymore, are we? What are we down now? Can't even get a 2% day on all this doom and fucking gloom. You'd think you can get a 2% day, and you can't even get a 2% day. Russell was down 2% today. That's pretty good to see, but it's still not the S&P. You want to see the S&P down 2%, 5%, 6%, something like that. Meaningful pullback. You might get one, though, with the end of today. There's a trap here for bulls. There is a trap here for bulls. And the longer they spend here, the bullshit in this trap is that this right here, they'll try to bring the hourly trigger down, the half-hour trigger down to stop. And the reason I left this up from this morning was because this was the opening bell. And I'm like, yeah, they're going to bring that half-hour trigger down. Right. I guarantee that we squeeze right when that half-hour. I'm not going to guarantee it, but I'm going to bet this. We squeeze right here. When that half-hour trigger comes down, boom, we're up on it. And they can pin the market. They can pin the market on the half-hour and hour trigger. So they can tee off on it to the downside in the after hours and get more doom tomorrow. They don't want this PT3 up here because this was up here, right? They don't want it they don't want it up here. They don't want the PT2 up here. They want it right down here so they can stop the upward movement. Now we can still squeeze above it, even if this stuff comes down. We can still squeeze above it. Problem is it'll likely come back down and still roll to the downside. Anyways, doesn't really matter. We'll keep buying the dips. Unless we start correcting, just another pullback.
Brent crude futures, that's what, $88.92 a barrel. That's up $1.50 or one.
But I want to close the fucking gap. And now the gap is the hourly trigger is now below the gap as of right now. They don't want to close the gap. And we all know the gaps always get closed in the upside, don't they? We leave gaps below and don't never look at them again, but the upside gaps have been closed since day fucking one. So close the gap, baby. I guess they say things like leave no gap behind, but in truth it's leave no gap above. Leave no gap above. This S2 and this 30-minute trigger is going to come right in line here. I wonder if they wait until 350 today. Are they going to wait till last minute, last 40 minutes, last 20 minutes? 241 right now. We'll see when they decide to take the hedge off. When they take the finger off. They're trying not to. They want to get that half-hour trigger and that hour trigger down so they can set up a bull for the downside tomorrow. Remember that we do have, by the way, if you are a supporter or higher, there is a midday update for you on the website. Supporter Pro Trader has a midday update on the website for you. You're also going to get a post-market update and projections for tomorrow. I want to see what happens here. Like, I really want to sell the hourly trigger, but not here. I don't like this at all, selling this at all, because we end up squeezing. Like all of this right here. Yeah, matter of fact, yesterday, when we squeezed to the hourly trigger yesterday, it was so fucking fast. We had said, oh, there's your chance to short right there, right? And it was like, bam, bam, straight back down. Algorithms just no time for a retailer to even grab that trade. It was so fucking fast. And they're setting it up again one more time for one more down move. Likely we'll get the other down move to the downside to break through and tap the daily trigger on SPOOs. If it doesn't happen tomorrow, like we have a sideways Wednesday, roll it down into Thursday and Friday. The fact is we've got volatility for the rest of the week right into Friday. So I'm going to expect more down into Thursday, and then a relief rally on the Friday of some kind of significance, and then maybe some further downside next week for 2 straight weeks of the new quarter. All they want is a good price here, right? All they want is a good price here. So we'll stay with this. We'll watch this. 2:43 right now. We still have another hour and a half left. I'm going to put CNBC back on and keep watching this. Beware that if you do, or if you are trading this up, if you are long for this close for a hedge to come off, just as before, I mean, yesterday I lost 20 fucking cents not being able to close any positions. I took some at 50, then 60, and then we kept blasting, and I couldn't close 80, 78. It was so fast. Came back down to like 61, 62, and closed the rest of that shit out. I'm looking for the same shit today, into the close today. We'll see if we get it. I don't know if we'll get it or not. Maybe they do pin this close, and then they do sell on the hourly trigger at like 6 o'clock or something like that in the overnight. You get the relief in the overnight. They're keeping the cash market out of the trade. So we'll just park our asses here and see what happens. All right, I'll be back here in just a little bit.
To get in really puts it in perspective how much has changed.
Yeah, Deirdre, home prices in February were 5.5% higher than February of last year, according to CoreLogic. And while that annual comparison is now shrinking very slightly, the price gain from January to February was actually nearly twice what it was historically pre-pandemic, suggesting this spring's housing market started out strong despite another rebound in mortgage rates. The trouble, of course, continues to be lack of supply. There are more new listings now than last spring, but supply is still 40% below where it usually is this time of year. We're still seeing that lock-in effect of current homeowners who won't sell because the cost of moving up is just so high. Well, how high? New numbers from ICE Mortgage Technology paint a pricey picture. In the 22 years before the Fed started raising rates, for the average homeowner, moving to a similar house across the street wouldn't change their monthly payment at all. Upgrading to a 25% more expensive home would increase their monthly payment of principal and interest by 40%, or about $400. But fast forward to today, and for homeowners who have rates near record lows, buying their own home in the current market would increase their monthly payment by 60%, and trading up to a 25% more expensive home would result in a 132% increase in that monthly payment, or about $1,800 more. Now, this is an average for the nation, so it will vary to market, especially out west where homes are priciest. Back to you guys.
Diana, those are some remarkable numbers. What kinds of buyers or sellers are actually willing to withstand those kinds of increases?
Well, first-time buyers who don't have to worry about what they're selling are getting into the market, or at least trying, and they're maybe trying to use all cash and get a mortgage later to make themselves more competitive. There are some people putting their homes on the market. Look, sometimes people simply have to move for life reasons, or potentially people who are downsizing, and in that case, they're still in a pricey market, but they would be paying less. So those are really the buyers and sellers in the market.
What is the typical formula still 20% down and 80% financed, or is it different today because people might be moving into these transactions with slugs of cash that could up the amount they put down?
Well, if you have the cash, look, it's going to make you much more competitive, and you'll get a lower mortgage rate if you put more down. But really, we're seeing people go toward FHA loans, which are 3% down, and paying that mortgage insurance so they don't have to put down so much up front. And for the first-time buyers, it's getting that down payment that is really the hardest entry to this market because they just don't have the cash with rents so high.
All right, Diana, thank you very much. Diana Olick reporting. Coming up, shares of Tesla lower after a big miss for the first quarter in deliveries. We'll ask our trader if it's time to buy the dip or stay away. That and more when we come back in 2 minutes.
Check out shares of United Health. It is the biggest reason for the Dow's big drop today. Joining us now to explain what is ailing UNH and other health insurers is Bertha Coombs. Bertha.
Hi, Deirdre. It's basically Medicare Advantage. The insurers are facing disappointing payment rates for 2025 at a time when higher medical usage among seniors and a competitive market is already pressuring margins. Now, the Centers for Medicare and Medicaid says in 2025, MA plans will receive a 3.7% payment increase on average. It's the same thing they said in January. People thought they were going to raise it a little more. Stevens analyst Scott Fidel says the effective rate amounts to actually a 16 basis point cut, taking in other factors. For Humana, well, its shares are sinking to a 4-year low on the news today. After CMS's initial notice, Humana calculated that rate would amount to a 1.6% cut for its plans. With the rate now confirmed, B of A analyst Kevin Fishbeck cut the stock to neutral, saying the rate environment poses a very big headwind for Humana, which gets 70% of its revenue from MA. Now, United Health is just as big in Medicare Advantage, but on the Optum side, that's its services side, with 90,000 doctors, it can control medical care costs a bit more easily than most of its peers. CVS Health's Aetna can also get a boost from its recently acquired Oak Street Health primary care services. Cigna is in the process of selling its small Medicare Advantage business, so that's why you see they're not really getting hit so hard. This rate pressure is coming at a time when seniors are utilizing more medical care, and cutting back on services or raising premiums risks losing market share. So it puts them in a tough spot as they look to 2025, Tyler.
All right, Bertha, thanks very much. Bertha Coombs. Time now for today's 3-stock launch. We're going to pick up on that thought about the insurers. Here with our trades is Scott Nations, president of Nations Indexes. And first up today, Scott, is the aforementioned Humana. What's your trade here?
Tyler, this is a long-term buy, even though, as Bertha laid out, lots of problems in the Medicaid Advantage space. Humana is the worst performer in the S&P, down 14%. So why is it a long-term buy? Well, because the Medicaid Advantage program is generally a great business. And with a forward PE of just 18 for Humana, it's fairly priced. It's not cheap, but it's not expensive. I'm not a big fan of technical analysis here, but for Humana, the relative strength index, the one technical indicator I really pay attention to, says it's screamingly oversold here.
Up next, D.R. Horton, Wedbush downgrading 5 home builders, including D.R. Horton, to underperform from neutral, saying a seasonal stock decline into summer is likely. We were just talking about this with Diana. Shares are down about more than 3% today, so off its lows. Scott, what is your trade on D.R. Horton?
D.R. Horton is a buy, but brace yourself, and I'll explain why in a little bit. Because the home builders have done a wonderful job of managing higher interest rates. D.R. Horton is higher over 1 month and 1 year time periods. Forward PE of just 11 means it is a bargain, but EPS growth is not going to be enough, because with a beta of 1.6, D.R. Horton is just about half again as volatile as the overall market. So again, forward PE of 11 means it's a bargain, but with that beta, it means hold on to your hat.
All right, let's move on to the stock that everyone used to love, but now everyone likes to whoop on. That's Tesla. Shares of the EV maker under pressure after reporting deliveries have dropped for 8.5% from a year ago. Your trade, sir, on Tesla.
Tesla is a hold to a sell. As you can see there, down 5.5% on that news. The problem is that the deliveries being down 8.5% was worse than was expected. It's the first year-over-year decline for the company in deliveries since 2020. And I think, Tyler, to your point, I think investors are finally getting over the crush that they had on Elon. They realize the company has to produce. And with a forward PE of 55, Tesla has to grow just for the share price to stay in place. And it just fell out of the 10 biggest names in the S&P 500. It's now behind both JP Morgan and Visa. And so it's tough to see how the bleeding is going to stop for Tesla.
Scott, finally, last word from you on what we're seeing in the markets today. It feels like there's worries growing about how many rate cuts may or may not be on the table this year. But could you make the argument that a healthy economy is better for stocks than looser policy?
We started the day with a big increase in the 10-year rate. We had a big increase in the 10-year rate yesterday. So some ugliness in as far as stock prices shouldn't be a surprise to anybody. My takeaway is this: with the unemployment rate below 5% and inflation at nearly 3% or above 3%, why in the world would we expect the Federal Reserve to be cutting rates in June?
All right, Scott, thank you very much. Scott Nations with us today. We will be right back.
Catch the Market Zone today and every weekday on Closing Bell, sponsored by E-Trade from Morgan Stanley.
Power E-Trade's award-winning trading app makes trading easier. With its customizable options chain, easy-to-use tools, and paper trading to help sharpen your skills, you can stay on top of the market from wherever you are. E-Trade from Morgan Stanley. Power E-Trade's easy-to-use tools make complex trading less complicated. Custom scans help you find new trading opportunities, while an earnings tool helps you plan your trades and stay on top of the market. E-Trade from Morgan Stanley.
Good morning with Vocalax.
Good morning. Yeah.
Try Vocalax Chewy Fruit Bites for fast and gentle constipation relief in as little as 30 minutes, making your good morning even better with Vocalax.
As a builder, it just makes sense. When we decided to take our old deck down, we knew right away we were going in with TimberTech. The longevity, the sustainability.
Thing about it, it doesn't look like plastic. It's beautiful. I mean, you can really create the custom deck of your dreams.
You have an excellent warranty.
Warranty?
No, warranty.
Okay, gotta go.
You must have American Home Shield.
How'd you know?
I can tell your appliances and home systems are protected. Covered repairs and replacements are taken care of. Warranty never lies. Half off cookie dough! Visit ahs.com today for 40% off.
Introducing the Core Collection from Diori, featuring the ultra-soft, lightweight core short and jogger, both with a breathable boxer brief liner that ensures all-day comfort. Constructed with performance stretch fabric for ultimate freedom of movement and moisture-wicking technology that keeps you fresh during the toughest workouts. Basically, it's magic. Go commando in confidence with the Core Collection from Diori.
Every day, more dog people and more vets are deciding it's time for a fresh approach to pet food. They're quitting the kibble and kicking the cans and feeding their dogs dog food that's actually, well, food. Developed with vets, made from real meat and veggies, portioned for your dog, and delivered right to your door. It's smarter, healthier pet food. Get 50% off your first box at thefarmersdog.com/realfood.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Let's look at the markets for you. The Dow Industrial's off about 1%, 430 points. Been there for the last couple of hours, rather stable. The main reason, as Bertha Coombs pointed out, or one of the main reasons, is a severe sell-off in United Health. United Health is a $400 a share stock. It's meaningful because the Dow Industrial is a price-weighted index, so a stock at that level of price will affect the Dow more than it would affect, for example, the S&P 500. There you see it at 457, one of the 2 or 3 highest priced in the Dow, along with Microsoft.
And some of the air coming out of the tech trade a little bit, but as Bob
just to note that at the money volatility and SPX calms down on the 3rd and then ramps on the 4th.
Yes.
Down really rather significantly the past couple of days. We'll keep an eye on that one for you. And we've got a big guest lineup tomorrow on Power Lunch. Thanks for watching.
Welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make or break hour begins with rising anxieties over the rally as the jump in interest rates. Well, it's sending stocks falling today. We're going to ask our experts over this final stretch whether the markets are likely to continue to go down from here and where they are likely to go. In the meantime, your scorecard with 60 minutes to go in regulation looks like this. The major averages under pressure for most of the session today. That's where they currently are. We are off the worst levels. It's the 10-year yield. Well, it's hitting its highest level since last fall, and that's made the markets a little uneasy. The Russell 2000, the biggest loser today. And besides the move in rates, oil's higher, gold's higher, dollar's higher. Watching all of that. United Health not higher. It's the biggest drag on the Dow. On a surprise from the government regarding Medicare plan payments. And Tesla's falling again as delivery numbers miss Wall Street estimates. It does take us to our talk of the tape.
Last night also, I noted with you last night that CTAs had begun to sell yesterday. There's some more selling again today, just a heads up.
Investments and Kristen Bitterly of Citi Global Wealth. As you see, everybody's with me at Post 9 today. Nice to see everybody. Kristen, I'll come to you first. Is today about yields? Nervousness about where they may go and that the Fed may not cut as soon as we hope?
Another note, the SPX vol control gang went away today.
Either touching all-time highs or within reach of all-time highs. So I don't see anything to read into today more than geopolitics resurfacing, yields popping up. And I think the question is, everyone's trying to ask, is inflation more entrenched? Is that something to watch? When you look at the backdrop, though, I have to say you have to go back to what we know is true. We know that there's $6 trillion of cash on the sidelines. We know that the Fed's trajectory from here is downward. We know inflation is coming down. And we know that earnings have turned a corner as well. So when you have that fundamental backdrop, it's actually pretty constructive for risk assets overall.
So you're still pretty bullish then on where this market can go?
And you have to pick your spots and you have to stay diversified. So we're balanced within our portfolios. But I don't see, if you were to say those four things that I just said in any other environment where people weren't waiting for a Fed cut, I think people would say that actually tees up pretty nicely for risk assets.
Well, I mean, we can probably, Dan, do without a rate cut. Well, we can't.
One other thing here, too, is that regardless of what happens into this close today, whether we squeeze up or not, I'm going to be looking for another trade for more zero dates. If we squeeze or not here, whether it pulls back into the close, I will be putting more zero-date calls on the bell for tomorrow as well. I'm not looking for any more volatility in the market until Wednesday. Or, no, Thursday. Today's Tuesday, right? Thursday, I'm expecting more volatility, but less volatility on Wednesday.
Yeah, listen, I think...
so from this point forward into Thursday, expect less volatility, but expect it to ramp back up again into Thursday for Friday.
You were overbought on a number of measures, not dramatically overbought, but overbought enough. And so I think when you...
I'm also looking at like put delta and call delta right now, and put premium and call premium. Put premium and is falling off right now. Call premium's kicking up. People are selling puts and buying calls into this close. Just a heads up.
I think absolutely on the basis that yields are backing up. But I would reinforce, or I should say align myself with the point of view that I don't think 4.3% is some deleterious level, or even 4.4, or even 4.5. I won't buy into that idea.
Why?
The rate of change matters more than the level. Meaning, as rates adjust to higher levels right now, and we can have a separate conversation about why that is.
Yeah.
That might cause some consternation for stocks in the context of what I just articulated. But once you settle in at 4.3 or 4.4 or 4.5, can equities not move higher? I mean, of course they can, and look no further than performance in the first quarter. The 2-year, the 10-year, whatever you want to look at, was higher by 30, 35, 40 basis points in the quarter, and stocks, whether the equal weight or the market cap weight, still had a good performance.
But stocks were moving higher because they were anticipating rates continuing to go lower, coinciding with Fed cuts coming. You can't tell me that no cuts, higher rates, and no equities just going to continue to go higher.
Yeah, I will tell you that.
Why?
First of all, it wasn't just the prospect of rate cuts that drove stocks higher. The economy improved. A couple of months ago, first quarter GDP growth was expected to be, call it 0. Now it's going to be somewhere between 2 and 3%, depending on how the March data comes in. So the economy improved. Yes, earnings expectations have come back in, but we're probably going to beat those levels. I have to run through the numbers later. We're probably going to beat that level. I don't think that the whole reason the stock market was up, call it 5% equal weight, 9 or 10% market cap weight, is just because we were going to cut rates. So with that said, yes, if the Fed doesn't cut rates in June, or perhaps they push it out for another quarter or something, not the optimal scenario, so to speak. But if the economy continues to perform, we've come out of the earnings recession, then why wouldn't on-balance stocks be higher?
Well, maybe because rates continue to creep a little higher if the economy, in Dan's words, continues to perform, Lauren.
When I take a step back from the next couple of days, and look, we're going to have a bit of a wild couple of days. We have the jobs report on Friday. It's PMIs that have been stoking some of this concern, inflation next week. I see today's market activity as very much an inflation story, a concern that the economy is overheating, which is a concern, by the way, tactically, I agree, is the biggest concern for the market. But when you look over the next 6-12 months...
I disagree. This whole entire conversation revolves around one thing and one thing only.
And we're starting to
and the Fed...
I still expect
cut rates, then not cut rates, then cut rates, then not cut rates, then increase rates.
For the right reasons?
Can the Fed do that? That's the actual question.
Are they going to be able to cut? You know the difference of where I'm alluding to.
I do, of course. And my sincere hope is that, well, that's the wrong way to put it, is that they're going to have to cut, that they're cutting for the right reasons. Because what
yeah, he can't get pigeonholed with like, oh my God, I have to cut. It has to be like, yeah, we're going to do a cut. We're going to pause now and not do any more cuts. We're going to increase it a little bit.
Uptick in inflation. I expect that we're going to have more inflation and more inflation.
Cannot have the Fed lose control and be forced into anything.
As a result of the inflationary backdrop we're in.
Do you think the bulls need a rate cut this year for this market to continue to go up or not? I get the feeling that Kristen and Dan say no, not necessarily the economy's good, and ultimately that trumps most everything else because that means that earnings are going to remain.
I mean, this is the exact same argument as like when they were talking about, well, I don't know, fucking 7 rate cuts. It's absurd. And then you've got the other side of the absurdity of, well, we don't need to cut anything. Bring the unemployment numbers back down. I would be very comfortable with no cuts.
You think earnings are going to be good? I mean,
but the danger is that ramping of unemployment.
The argument why he's bullish because he's
or even the velocity of
ultimately that's what matters more.
Inflation coming down as well.
Coming down.
Cutting inflation too fast.
Coming down. Prices aren't really coming down. So those input costs down, prices remaining up, margins are protected, stocks go up. That's what he would say.
Yeah, and earnings troughed in Q3 of last year, and so we've actually seen a broadening out of this rally. I think that's been kind of the key story, not just a U.S. story, but a global story. We have 75% of stocks that are trading above their 200-day moving average.
I got to preface it with that, too. If you see the unemployment numbers come down,
some type of bull market, you tend to see
then you're fine. You don't need a rate cut. The unemployment is the danger. It's the behind-the-scenes danger.
That we're expected to see this year to about 8%. It's not knock it out of the park, but you're actually seeing a much better backdrop. I do want to hit upon this idea of a rate cut, though. I think the rate cut is important psychologically to markets. So this idea that, okay, this is the trajectory that we've hit peak rates, there is...
No, it's not on its own. It's not just a rate cut. It's not psychology.
To markets, I think
it's not.
This year for the rally to continue.
Don't you agree with that?
Yeah, I mean, listen,
it's not. It doesn't stand by itself.
This all day. What is the market pricing? What do we expect? What can we do with this tactically? Yes, a rate cut would be helpful for markets, but not because a rate cut itself is
only if unemployment goes above 4%.
If the Fed believes that inflation, and I just want to take a step back here for a second. The inflation data is already in the ballpark of where the Fed lives. They want inflation at 2%. Sure, it's 2.5.
Right. PCE was a much better read than either the CPI or the PPI.
And that's right.
The PCE is what matters more.
The PPI. Prior to this whole episode, 90% of investment professionals had no idea the PPI was even released. So the fact that everyone's focusing on it right now, let's just take a step back. No one pays attention to it for 25 years. But that said, the Fed cares about the PCE. It's already got a 2 handle on it. And if, as everybody believes, the January and February data was a bit of an aberration, you're going to continue this skirt slide down into the mid-2s, where you are there already, at least on a headline basis, but core will continue to slide down into the mid-2s. And the Fed believes, whether I believe it or not, or you think it's right or not, is separate from the fact that the Fed, particularly Jay Powell, continuously tells us that he feels comfortable and willing to begin and cut rates in the next couple of months. Is that going to be helpful for markets? I think so.
Well, obviously it would be, but the question is how destructive would it be for markets if there's none?
And I'm saying I don't think it's particularly destructive because I will disagree with Lauren. The cracks in the labor market, I could put up video of people on CNBC for the better part of 2 years talking about cracks in the labor market. It doesn't mean that there aren't cracks in the labor market. I agree there are some signs of weakness, but historically, and by historically I mean the last year or two, those cracks have proven to be
historically the last year or two.
They disappear. A couple months later, the spike in the jobless claims that happened that ended up being fraud in California.
I don't mean historically.
If the economy continues to hold up, expanding in the 2 to 3% range, earnings, as Kristen noted, we're coming out of the.
You're out of your fucking minds.
Continue to grow in the mid.
Fucking A, man.
That's perfectly fine for me. And over the last year, the economy has shown me. I didn't agree with it originally, but has shown me that it can do fine with a Fed funds rate in the 5s.
Can I disagree back?
Please.
One of the things that we're hearing the most from our private markets businesses, who are really looking at Main Street, small and medium-sized businesses across the economy, across industries, is that actually 75 basis points this year would make a huge difference. And it has not only to do with the market sentiment around, oh, maybe the Fed could navigate a soft landing and expand the cycle a la Greenspan in the 90s, but also that demand isn't necessarily keeping up with even the reduction in costs that we're seeing on the inflation and wage front, which I agree is happening. And so
they just need, look at as long, it's not hard.
Themselves is going to be really important. And I think that the longer that we see a Fed funds rate where
you don't need 75 cut, 75 BPS and cuts. You just need, if unemployment gets above 4%, you are going to have to cut. And if they don't cut and unemployment runs wild, you are going to see the market roll, period. End of story. There is no discussion on that.
Or Fed officials talk.
You're not racking up 5%, 6% unemployment and not cutting. What'll end up happening is they'll run rampant and they will chase it. Even if they dig their heels in and say, oh, we're not cutting, they will when the market goes down.
And this is something where I really had to check my own assumptions, because I asked the same question, like, what could 25 basis points or 50 or 75 basis points possibly mean in terms of a company's real financing costs? And the reality is that it is a meaningful impact to financing costs. And what I'm hearing from our investment teams is that it's also a meaningful change in the way companies would think about their financing over the next few years.
Fuck no. Fuck no.
A meaningful.
You ain't getting 75 points cut. You're out of your mind.
The Fed and what this trend is.
Now you're really fucking crazy. These people are like, I got crazy on the left and the right of me.
You know, rates going from 0 to 5.
How about 25? If we go over 4% unemployment,
we're going to cut rates.
And you tell everybody you ain't getting any more, that's it. Suck it up. You'll likely get a rate increase the next time I'm here.
I talk about the Russell.
That's what you need J-Pow to say.
It's down depending on what rates do. You're a believer?
I believe in the broadening story.
You're likely going to get 50 increase the next time.
The point that you were hitting up on is so important, though, because when we talk about where there's exposure, who's exposed to the short end of the curve, who's exposed to the long end of the curve when it comes to rates, I think we have to look at, for example, your average consumer within the U.S., when you look at the eligible homeowner population, you have about 65% are homeowners, of which close to 90% have locked in fixed rate.
3:14 in the afternoon. Same kind of action as yesterday. Be careful here. It gets very dangerous. They can send this thing up or down. Doesn't matter.
If we look at investment grade corporates, same thing. You had a lot of those corporates got their balance sheets in order, locked in low rates. The refinancing risk really comes up next year. So I think the rate cut is not.
I will be placing another trade at the close today regardless. There'll be another 0-day trade for tomorrow on hopes of a calmer market tomorrow.
If we don't get
some kind of a squeeze play either today or tomorrow. I don't care if it's now or tomorrow, one way or the other.
8% earnings growth, if I heard you right?
This year and 6% next year. So it's not.
Okay, for the year. Okay.
And it'll be a size, probably like 300 contracts, 0 dates for tomorrow.
Right, expectations have come in
Yeah.
from maybe 10%
I mean, we were below
to 5
consensus
below 5.
expectations for the full year, so we raised in terms of full year guidance because we were thinking for full year, given we weren't anticipating the first cut until the summer months, that we would have seen like 5%. So our raise was 5% full year to 8%.
What about the momentum trade itself? High tech growth, mega caps, that area of the market, which is 25% of the S&P.
Nothing's changed on momentum right now. Well, I guess daily momentum's gone down, but market momentum has not.
5%, and then you have about 20% of earnings contribution. I think, we could all argue the Mag 7 kind of became the Mag 1. I think the interesting thing about mega cap tech stocks and growth stocks is really that's almost the flight to quality play right now. So when I'm talking about this broadening out, we love like equal weighted S&P 500. We love the S&P 400 and 600 growth indices. I think if we see more flows go into that, it's because of almost a risk off type scenario where then you see the flows go into short end of the curve and mega cap tech.
Your flight to quality, or if you want to call it that, is credit related, right? I mean, that's where you see more opportunity.
We're highly focused on total return. I think this even if it's a 3 or 6 month risk, this reinflation or really reacceleration of growth is a major risk for not just valuations, but for how many investors are positioned. And so we're looking at taking incremental equity risk in high yield because we see very similar quality characteristics as Kristen was describing for investment grade as a result of pulling out maturities, reshoring balance sheets during the pandemic. We're also looking at a structural allocation to commodities and looking at a broadening of the technology play and artificial intelligence play by
3:16, 44 minutes left.
In the growth space, small and mid-sized companies in the growth space, as well as infrastructure equity. All of this is sort of portfolio construction around inflation, and we're taking a neutral duration position.
I want to buy another 100 pack right now.
Even though we disagreed repeatedly, I agree with everything you just said. We are long a lot of commodities and commodity exposed names.
Okay.
We do a ton of work in high yield. I mean, high yield had a pretty good first quarter. High yield loans had a better quarter. And the market there is telling you basically the same thing that the equity market is telling you.
Yeah, but do you think if rates continue to move higher, that spreads aren't going to widen?
Listen, rates have continued to move higher and spread.
Well, they haven't moved higher that much, but I'm talking about you start to get above 4.5, and then maybe you're talking more about not so razor thin spreads in credit.
Well, I would push back a little bit because the royal you have to remember that the high yield market today is not your mother's high yield market. This is a much stronger, higher quality market, more weighted to the top end of the rating spectrum than it is the bottom spectrum. Cash levels are better, debt levels are not particularly onerous, et cetera, et cetera. So it's not exactly how it used to be, and that's part of the reason why, despite the 30 basis point move in yields already you've seen this quarter, high yield spreads, depending on your index, are call it 300 basis points right now, which is not the tightest ever, but pretty tight.
We're talking commodities. What about gold? What do we make of this move in gold? We're up again today. We're about $2,300. You talked about commodities.
Of course, it's a reaction to the inflation story, and I think that gold and precious metals as a component of a structural commodities exposure can make sense. It's not where we like to take, all of our inflation risk, but I think it's an important part of the story.
Well, when you said commodities, what specifically are you talking about?
Productive metals, particularly those that are fueling the electrification and digitization of the economy, as well as I think energy is an important part of the story, and of course a little bit of gold as well. One thing I will just piggyback off of Dan from earlier is that everything he's described in terms of high yield quality, I completely agree with. It's why spreads aren't likely to widen as much as they have in past cycles. They're totally going to widen if the economy starts to weaken.
Sure.
I think the difference is that your equity valuations will also be reacting to that, and why not take a nice spread while you're at it?
Since we're on commodities, what about energy? Right, oil, energy is the best last month. It's up again.
I think
as crude continues to rise, you like it?
I think for crude to really break out from here, it's either geopolitics or Chinese growth, to be honest. I do think, though, within
both of which you're getting.
Both of which you're getting, but would have to continue. So, we've seen this range, and it's a very wide range, 70 to 90, but I think that breakout beyond 90 would require some additional support. I do think, though, when you look at energy companies, you have an interesting, compelling argument there in terms of share buybacks, free cash flow generation, dividends. Obviously, the earnings story wasn't pretty last year. It's not great from an outlook, but you have to think that oil, with the rally that we've seen, is going to be a tailwind. So maybe not a core holding within a portfolio, but tactically can make a lot of sense.
All right, $85. WTI as I look at it right now. That was fun. I appreciate it very much. Thank you. Kristen, Lauren, and Dan Greenhouse joining us here at Post 9. Let's send it to Christina Partsenevelos now for a look at the biggest names moving into the close. Christina.
Let's start with Endeavor shares gaining after private equity firm Silver Lake agreed to acquire the entertainment company for $27.50 a share. The transaction, with an equity value of roughly what, about $13 billion, is expected to close by 2025. You can see shares of Endeavor up over 2%. Shares of PVH, the parent company of Calvin Klein and Tommy Hilfiger, tumbling after reporting weak Q1 and full-year revenue guidance. While the retailer did beat quarterly estimates, PVH warned of tougher macroeconomics and slow growth, specifically in European markets. Shares are down a whopping 23%. Scott?
All right, Christina, see you in a bit. We're just getting started here on Closing Bell. Up next, Disney's big boardroom battle. Shareholder votes coming in as we speak. Ahead of the media giant's crucial meeting tomorrow, 13D Monitor's Ken Squire with us next. Why he thinks the vote might not be as close as people originally thought. He explains after the break. We're live from the New York Stock Exchange. You're watching Closing Bell on CNBC.
I had to do this shit yesterday, too. We had to fucking sit here all day long yesterday for the same bullshit. Now I wonder if they do it the other way and say they're like, fuck you, we're going straight down to the depths of hell. You should have went all in fucking puts here.
Welcome back. The boardroom battle at Disney nearing the finish line as reports suggest the company is currently leading billionaire Nelson Peltz in the shareholder vote. That final count coming tomorrow with the annual meeting looming. Joining us now, Ken Squire. He's the founder and president of 13D Monitor, a CNBC contributor. It's good to see you. Good to have you on Closing Bell.
Great to see you, Scott. Thanks for having me.
You, like many, are gaming this out, and you suggest it's not going to be as close as many people think. What leads you to believe that?
Yeah, I think that, you know, with the news with T. Rowe announcing they're on the company side, and I have no reason to believe that the reporting on BlackRock is not true, that they're on the company side. Going into this, I think Vanguard is probably the big shareholder that's most likely to support the company out of the index funds. And, you know, it could be a clean sweep for the index funds from the company. And if that's the case, that's 17% of the shares. And, you know, in a fight like this, maybe 70% of shareholders will vote. So they're almost halfway there just with those three big index funds.
We always focus, of course, on the big guys, so to speak, but there's a sizable retail contingent here, too. I guess turnout the vote matters. What's happening behind the scenes, do you think, in the final stages here?
Yeah, the company and Trian and their proxy solicitors have phones to both ears. They're calling everybody they can.
Also starting a position for tomorrow.
One way you can change your vote, and it's really only your last vote that counts.
522C.
They're frantically making the calls. You're right. There's 30+% retail in this company.
Not a ton, not 100 packs. 10.
Unless a really good argument is made to them. It's hard to hit all those small retail investors and get any real mass out of it. So this was a great fight for Nelson Peltz. If I was voting, I would be voting for Nelson Peltz. I think he should be on this board, but I think it's really an uphill battle at this point.
Tell me why you'd be voting for him.
I think that this is a board that needs an experienced shareholder when it comes to succession. This is not about last quarter. It's not about next quarter. It's about long term. It's about holding management accountable. I think having a director on the board like Nelson Peltz that can debate, that can hold management accountable is invaluable here. When it comes down to it, this is basically Nelson Peltz versus Maria Elena Lagomasino. That's who he's running against. And if I'm a shareholder, I like the board with Nelson on.
Well, I mean, what I find interesting, too, is that, you know, the stock has gone straight up in the last, you know, several months. But both sides could potentially use that in their favor. Iger could say, look, the only reason the stock has done what it's done is because of these plans that I've already laid out that shareholders already like, whereas Nelson Peltz can say the only reason the stock's done what it's done over this last many months is because I'm here. And my chances have increased of getting on this board, and I'm going to be able to make a difference, and that's what shareholders want.
And not only can they both say that, they both are saying that. And they're both right to some extent. I mean, Disney had a good quarter that helped the stock. I don't think the stock would be where it is. I don't think Disney would have done everything they've done if Nelson and Trian hadn't shown up. But again, this is not about last quarter. It's not about next quarter. It's about CEO succession and having a board that has experience with that.
Also adding more RGF.
Experienced director to help with that.
You have a better read than many others, if not all others, on where we are in terms of activism in general. How would you characterize the current environment for activist investors right now?
It's as strong as I've ever seen. I mean, going back 10, 15 years, you know, over the last 5 or 6 years, even through COVID, the activism was taking a backseat to growth stocks and high tech, you know, Magnificent Seven. And in a market that now is no longer rewarding growth, but is really looking at profits, there's a lot of.
This was the.
That need to develop new skill sets.
This was the opening price this morning. Look at where we've gone for the opening price so far. This is where we opened at 9:30. We're just above now.
For activists out there, a ton of opportunity.
Ken, I appreciate your insight as always. We'll see you soon.
So we're starting to fill in the gap left behind from the after hours trading back here.
By the way, don't miss Ken Squire on Last Call tomorrow evening. He's going to react to the vote. So you heard what he thinks is going to happen. He'll react to actually what does. That's tomorrow, 7 o'clock Eastern time, once we actually know the total. Up next, how sustainable is this strength? Stocks are sinking, as you know, in today's session because rates are rising.
It's not sustainable.
Tony Pasquarello is back with us. We get his take on where he sees this record rally really heading from here. Closing bell right back.
These fucking dealers aren't buying shit. They gonna try to fucking short futures tonight or what? Christ. Dealers are like, yeah, we're gonna buy this shit for just enough to get that hourly trigger and that half-hour trigger and blast this shit down one more day, Cap. Don't you worry. Fucking picked it up right here. Offer it up. Just gonna bring it up just enough, Cap. We're gonna fucking sell it right up here on this hourly fucking trigger. Like, they literally fucking, like, you see it last night, right? Like, selling fucking futures, then come in, swoop in, bring it back. Like, this is all they have to do here, and now they can offer it up. And the fucking or not even the overnight. Oh, dude, definitely right now. Like, parking it right at 9:30 this morning, like, right fucking here. Offer it up, see if anyone wants to buy it, short that shit back down by the time they come in to open. Any takers? Who wants to buy it right here? There's a fair chance of it being parked. 3:32. Another 29 minutes left. Hopefully, they got more call buying coming in so they can chase that shit. I'm bouncing around between 3 and 5 cents. Buy that shit back. Buy it all back right now, dealers.
.com.
Stocks are selling off across the board today, continuing their rough start to the second quarter.
Oh, dude, shut your... I can't even listen to this fucking guy talk right now. Buy it all back before the close. Like, just buy all this shit back. Whoop. We'll go back to short and overnight. There's no real requirement, though, for them, too, is there? What was the 6 a.m. price? Or 4 a.m.? Holy fuck. It's way the fuck up there. 4 a.m. right here. That's 4 a.m. right there. Ugh. IWM turning around now. I do want to give you a warning here. If you cannot trade futures, if you see IWM down here, I want you to see this back down here. If you cannot trade futures, this shit gets dicey at least dicey. You blast up here, right? Come into tomorrow morning, they sell you right back down before 9:30 in the morning, and you miss this whole entire move right here. There's likely another leg down scheduled. What they could also do would be they bring us up, push us into the big finger trap, then they drop you on Thursday, and then Friday back up again. Be wary of that as well. There's no safety here for you as a bull where we are currently. No safety. If you're trying to like buy the S&P 500, own the underlying, we are not out of the woods yet. Price on SPY right here, even if we get above the daily trigger or the hourly trigger, does not make it so. You still have to beat the prior high and retest the hourly trigger to be out of harm's way. Yeah, I know, we're coming into supply. I know. Do you want to roll this down here? I get it. I know what you want to do up here. I know you want to send this back down again. I get it. I get you brought the half hour and the hour trigger down. I see the setup. Let me check the half really quick. Yeah, dude, half hour velocity looks fucking juicy. It's so fucking juicy right now. It's like a prime fucking trade. What's going on with my stream? Am I losing my stream again? Am I losing my fucking stream? God damn it. Dude, what is this shit? Why is this happening right now? Restore my connection. What the fuck is going on here? God damn it. Fucking, I'm losing my stream. Some of you guys are losing the stream. I don't know why I'm losing the stream here. It says log in and out of Twitch. Fine, fuck you, I'll log out. Oh, shit, I fucked up. Oh, man. Come on. No, dude. I'm losing the stream right now for good. If you're on YouTube, are you still here right now? Yeah, I'm having major problems with Twitch right now. Having problems, so I'm not gonna bring the stream back up on Twitch. They can come over here to YouTube. They can join us on YouTube. So you can hear me on Twitch, but not see me on Twitch. All right. We ain't doing this again today. I got to figure out what's happening here. I'm having like Twitch problems today. YouTube's fine. Fucking yesterday at Canva. I'm having some issues. I gotta change my IP, I think, from the whatever you call it side, from the provider side. I'm gonna change my IP today. Come on, dude. It's 3:42. Fuck me every fucking day. It's like, they used to do it like regular, like 3:20, 3:40 in the afternoon, give you 20 minutes. Now it's like fucking, we'll do it at 3:57, dude. Fucking down at 2 pennies right now. Fucking pissed. I'm not selling them. If get fucked, take my money. I'll do it again too. And I got to start a position for tomorrow, so you can do whatever the fuck you want. And I will add another fucking 100 contracts. Well, I got 10 for tomorrow, but I'll add 90 to make it 100. So you either going your ass up there now, or I'm going to do this shit at the fucking bell for you. I don't give a fuck. This week's going to be green one way or another in a big way, so. I had a green day yesterday. Not a lot, but I was green. Today, I'm getting aggressive and losing some money. That happens to me. I can't be a goddamn winner all the time, but I'm going to start sizing this shit. I'm getting I'm getting pretty fucking bulled up here. In the background, like in my brain, I'm like, I'm going to hit one of these for fucking 50, 60K. I already know it. One of these is going to be fucking big. And I'm fucking ready for it, so let's do it. Let's make some fucking money. God, I normally don't trade this shit either. Normally I take these 2 weeks off and don't do anything in the market. Usually don't even stream. I'm like, yeah, just stay away from me. Don't talk to me the first 2 weeks of a fucking new quarter. It's like bad. And I'm losing money right now. First week of a new quarter. I actually don't think I've ever streamed the first 2 weeks of a quarter, any quarter. I usually take 2 weeks off every quarter, right around there. Not like the fully 2 weeks, but basically the 2 weeks. Like right towards the end of the 2 weeks, I'll start streaming again. Like I usually have no business with the first 2 weeks of a quarter. Don't want anything to do with it. And here I am trying to buy a fucking dip here today. Come on, dealers. Buy your shit back.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
If you can hear me on Twitch, if you switch over to YT to catch the last of the show, you can do that. If you're a supporter or a pro trader, you'll get another round of updates after the close today. Looking for a squeeze either now or in the overnight into tomorrow. Some sideways action expected tomorrow, and then another bloodbath into Thursday. We're gonna need Japan and the Euro riches to come out tonight, aren't they? Nobody buys this shit in the overnight. You know where we're going. We're gonna have to stay awake tonight and watch the fucking Japan and fucking London. Ugh. Goddamn London's like, I'm broke. It's not payday yet. It's middle of the week. Come on, baby. $11 minutes left. Ugh. 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 I haven't had a down week in some time. I'm due for one. This is shaping up to be a bad week. Even knowing that we're going down, the fact that I'm having a down week sucks. Come on. So fucking blind. I'm like looking to make sure I got it. I'm like, is it down to 0 right now or is it still on 2? I'm like, have they fucking zeroed them out yet? I guess I have to diamond hand these fucking things into 4 fucking 15 too. I'm going to have to trade futures tonight. I don't want to, but I'm going to have to. I can already fucking tell. I'm already you know what I'm thinking to myself right now? I'm not going to bed. I'm already thinking to myself right now. I'm like, I'm not going to fucking bed tonight. I will be awake at 2 fucking a.m. Fuck. All right, this is what I'm going to do for you. I'm going to put out a chart tonight for ES. I'll try to get the chart to you guys by like 9 or 10. And hopefully by 9 p.m. I'll take one of your finest micros. 7 minutes left. Now 1 penny left. I'm down to 1 penny right now. And I ain't buying any more. I got a bunch of stuff for tomorrow. I got 10 contracts for tomorrow, but I just lost a lot of money. Well, it depends on what you think is a lot of money. The good thing is I'm not on margin. I'm like, just give me 10 cents, 12 cents. Any of that? 12 cents, 20 cents. How about 18 cents? Give me 18 cents. I'll take 16 cents. How about 16? We'll just put 16 in there just in case. Give me 16 cents. Five minutes left. They don't have to buy this shit out. The worst part is, right, is they don't have to buy shit here. They don't have to buy a goddamn thing. They can just offer this shit up in the overnight. If nobody buys this shit, they can sell this fucker straight down again. Well, I'm in the wrong place. Like, they basically don't have to do a fucking thing here, which sucks. Now all eyes on fucking Globex. And you know what they're going to say? Fuck you, ain't done going down. Do I pray today? No, hell no, I don't pray. My attitude sucks. Oh, career low. He knows what I'm saying. Career low knows exactly what I'm saying here. Fuck. Are you not entertained? I'm gonna be awake tonight, Karen fucking teed. I fucking hate, I'll be honest with you, I hate staying awake in fucking trading futures. If I wasn't streaming all day, I used to like it, but I don't like it anymore. It's just too much. I don't get any sleep. And then I'm all cracked out for like 2 straight days. People are like, you drunk? I'm like, fuck no, I haven't slept in fucking 48 hours. When you hear like PJ traders wearing their pajamas, that's what I'm doing. I'm like, yeah, I traded cash market, then I traded fucking all night long. Then I took a power nap. They're neutral right now. That's why. There's not like a huge roll of calls coming in that they have to chase. Like they need like a if you're losing put premium right now, they're like delta neutral. They got call premium going up right now. They don't have nobody to chase right now. So they're not like forced to buy to go up into the close. There's still some scared panicness because of data coming out. So right where they are, they're pretty much neutral. Unless we get like a big roll of call buying coming in right now, there's no point. And then what they can do is hand it off at nighttime and say, hey, do you want to buy this? Right? So they can tell Japan, they can tell London, do you want to buy this? And if Japan and London says, nah, fuck no, we're not going to buy it. So they're going to sell into them, right? Sell into Japan and London. And then wait for the U.S. market to decide if they're going to buy it or not. Can you guys hear me or no? Fuck Peter Schiff. He can fucking earns crumbs. That's why he lives in Puerto Rico. Twitch is all fucked up right now. Adding to 522C for tomorrow. I gotta pray to the euros and Japanese tomorrow now. And if they don't fucking buy it, I'm gonna have to short. If you can hear me out there, I hope that you can hear me. If you can't hear me, let everybody know. I'll probably be trading futures tonight. I will put out a chart for ES but try to get it out there before 9 p.m. and then for you guys to have tonight. I still haven't closed calls for today. Hold on a second. I'm at fucking 0 right now. They fucking zeroed me out. These motherfuckers. I'm going to go outside and fucking chop a tree down. Now I'm fucking pissed. They fucking sent him to fucking 0 on the bell. These motherfuckers, dude. I'm not addressing that no audio problem again. I did it once. I'm done. I will be trading futures tonight. I'm still long calls. I haven't closed them. They've zeroed them out on today. Just took a fucking pretty big hit. More than $5,000 at this point. So it's a pretty big hit for me. I don't trade big anymore. I used to trade much larger, even on stream. I used to trade $20,000, $30,000 trades. I don't do that shit anymore. And this is actually big trading for me in 0 dates. I still have them on. I'm going to wait for 4:15 p.m. see if this thing rockets up in the after hours. They're still not paying me. They're not going to pay me. They don't give a. I don't think they care if we. I bet right now we could trade 520 in the next 15 minutes. They're not going to pay me anything. They don't give a fuck. Now, I do have 100 contracts on for tomorrow for 522. Hopefully that helps me fucking regain some fucking money. I started buying at 23 or 4 cents, but it was only 10 contracts, so we'll see what happens between now and tomorrow. Now, for me, mechanically, I need to see us not only go up in the overnight, but hold into the cash market. There's a little bit of a sell the open on this trade, by the way. I'm going to tell you now because I don't want to say it publicly tomorrow. But if it does go up, they're going to offer it up to the U.S. Open. And if they don't fucking buy it, they're going to sell this fucker right straight down again. So we'll see what happens with that. There's some fucked up mechanics going on here. But anyways, I did good on Monday. Actually, I was green on Monday. I closed Monday green. I'm pissed off on Monday because I knew better on Monday I should have known. Like I should have those first 2 trades, right? So what happened on Monday was when I took those first 2 fucking trades, when they would buy price and they sent it lower. So I was like, okay, this shouldn't be happening. If we're going up here, they shouldn't be bringing it back. Like if I buy a contract for $1 and they want to bring it back to like $1.05 or something, yeah, that's no big deal. I'm fine with that. But if they start thinking this is the bottom and then I'd get some premium kick, right? And I'm not getting any fucking premium kick. So anyways, I made money yesterday. Today I just got fucking torched. I'm sitting here right now and I'm fucking pissed. They're not selling it before Powell? Yeah. I don't think they're selling tomorrow. What I'm talking about is something completely different. So just as a heads up, I think I said this earlier too. I'm going to say it again. So today and tomorrow, vol goes down. Thursday, they start selling again, supposedly. That's a 9-day SPX at the money vol curve for you out there. Now, that's not my issue. My issue is if we go up in the overnight and they hold it up and they don't buy the open tomorrow, U.S. doesn't buy the open, it'll fucking drop like a rock. We'll go down and what we'll do is trade sideways, which will be a problem, right? They fucking pin it sideways, then they send it down on fucking Thursday. So we'll see how this plays out. So I want to see people buying it right now. I want to see Japan buy. I want to see the Europeans buy it. I want to see Americans wake up tomorrow and be like, woo, let's buy this shit. It's going up, right? And get that fucking FOMO going. So if they can get that shit going, then I'm down and everything is fine. If they don't, though, we got a problem. Okay. So that's all I've got for you for today. You'll get a market update tonight as to expectations on what to expect in the coming days. Don't say Europors. Tell all the Europeans to buy this shit. I need to make this fucking money back. I do not want a red week, dude. I have not had a red week in a while. So let's be back here tomorrow, 9:30 in the morning. I'll see you guys tomorrow. Another programming note, on Thursdays at 11:30 to 1:30 in the afternoon, unless there's something crazy going on, I have a meeting with admins and stuff every Thursday now. So I'll be here for the open for you and for the close, but not for that day. Now, if we're doing anything crazy, if the market's blasting down in the depths of hell, or the market's blasting up to the fucking all-time highs, I will be with you, and I'll push the meeting off to Fridays between 11:30 and 1:30 in the afternoon. So however, depending on how Thursdays go, I will be here. I will let you know, like, if I'm like, hey, market's fucking going to the moon or market's going to the fucking depths of hell, I will make sure that I cancel that meeting and be here for you on Thursdays. But otherwise, I got to start doing that stuff because we're not communicating enough. We need to see each other and get a bunch of shit done. So other than that, that's all just some housekeeping stuff. I will see all of you guys tomorrow at 9:30 in the morning. I'll see you then, guys and girls. Bye-bye.